The S&P 500 is up 16.79% in the past 6 months. Wow. Literally everyone is talking about US stocks and trying to predict the top. But what if I told you that there's actually another opportunity that could outperform the US stock market significantly in a moment of crisis like it has in the past? And it doesn't look like it's nearing a top soon. And yet, no one is talking about it. Everyone is asleep at the table and no one is looking. When you talk about investing, most people are thinking about the US stock market. FANG stocks like Facebook, Apple, Microsoft, Google are part of the majority of the world's stock portfolio, whether it's through an index or individual stocks. And it makes sense. The US stock market has shown incredible returns over the last couple of decades. In the last 5 years alone, the S&P 500 yielded 85.5%. That's an average of 13.1% per year. The same for the NASDAQ, 120% in the last 5 years, or the Dow Jones, 46%. All in all, the US stock market has led the charge ever since people start investing in stocks. I bet we've all looked at the NASDAQ before and thought, geez, I wish I would have bought Microsoft or Nvidia or Tesla 10 years ago when they were tiny. Well, what if I told you an opportunity like that exists today? While the US stock market has performed the best in history as of today, that doesn't mean this will always be the case. In fact, as I'm sure we've all realized, moments are changing. Geopolitics, a global pandemic, AI, many factors that have a huge impact on the global stock market have come up in the last couple of years alone. The US stock market is currently ranging around all-time highs. That means that pretty much everyone who has ever bought a share of the S&P 500 and held it is now in profit. But indicators could show that it's at a top and a bear market is on the horizon, coming closer every day for the US. And I'm not just saying that. The current Shiller PE ratio of the US stock market is 34. That's in the top 1% of what has ever been, indicating an overvaluation. Historically, the market has never been able to hold levels like this for long, which means that a correction is coming up. There are also signs of an earnings recession coming up, with a growing gap between earnings, forecasts, and actual results. The last two times this gap was as wide as it is now, in December 2001 and August 2008. The S&P fell by 34% and 49% respectively. Even though it's been predicted that inflation has peaked, May CPI reading of 8.6 showed that inflationary pressure are still larger than usual, and this could cause the Fed to keep its tight policy. And that's not all. Many respected analysts are predicting a potential recession in the near future. Morgan Stanley and US Bank have recently expressed worries about the US market, enter the Chinese market. And while that is happening, the US, different market, is showing immense potential. And that is the Chinese market. I think that due to the current Wall Street push to hammer Chinese stocks, an opportunity like buying Microsoft, Nvidia, or Tesla 10 years ago is here today. Nvidia, Tesla, and Microsoft's made some of those crazy 100x or even 200x runs in the last 2 decades, right? And in my eyes, some of these Chinese and Hong Kong stocks are poised to have the same sort of runs. And not only that, they may actually even replace Tesla, Nvidia, and Microsoft. So, am I just saying that some of these Chinese stocks will literally become the next Microsoft, Nvidia, and Tesla? Yeah, sales of BYD are already higher than those of Tesla. BYD is leading the world in EV. Hawaii phones already outsell Apple in China. And they've just released their new Pura 70 model with a brand new chip inside. Nvidia just named Huawei as their biggest threat. And the Ascendex 910B is the fastest chip for GPU-based calculations in the world. In some fields, Chinese and Hong Kong stocks will overtake the Magnificent Seven stocks as we know today. Walmart could get overtaken by TikTok Shop and Temu if they don't ban it, like TikTok has already overtaken Facebook and Instagram. So now they want to ban it. But even if they ban it, there is a whole world outside of the US, and the other 95% of the world's population can still use these Chinese apps, cars, phones, solar panels, drones, and whatever else the Chinese are building. Why the Chinese market is the best opportunity today? Look at the charts. It seems like Chinese and Hong Kong stocks have made a historical bottom. And I think they're currently gearing up for a big multi-year bull market. We've been saying this for over a couple of years now in our community, and it's already starting to play out. Let's look at the low of HQQWeb from October 2022, which has never been broken. So the low we just saw was actually a higher low late January this year. The Hang Seng Index of Hong Kong is currently at 1997 levels, which is when China took back Hong Kong. And yet its economy has grown about 20x in the same frame. There's a clear discrepancy there. Chinese and Hong Kong stocks have not gone into any crazy bull run in the past 15 years. And that's because the CPC directed all the money into a housing bubble. And now that they're trying to slowly deflate that housing bubble, but the money has to go somewhere. They want the money to go into the stock market. I know that for two reasons. China is going to start investing its retirement funds into the stock market. The CPC wants consumers to feel rich with the upward movement of stocks. So they start spending more. These are two simple things that we take for granted in the US and in the UK. But this has never happened before in China. But I believe they're about to happen now. And thanks to Wall Street and the hybrid war, both a propaganda and a financial war, the US has fought with China. Every tool has been used to keep Chinese and Hong Kong stock prices low. They choked off the tech by limiting check supplies. They imposed countless sanctions on Huawei and SenseTime and so many others. They downgraded Chinese bond ratings. They hiked rates to crash the yuan. They banned American investors from buying some strategic Chinese stocks such as AI leader SenseTime. And we can be mad at this, or we can see an opportunity. Thanks to all these efforts from Wall Street, I believe Chinese and especially Hong Kong stocks are at incredibly undervalued levels. And I believe this presents a generational buying opportunity that's for all of us to take advantage of. In this chart, you see a comparison of the NASDAQ 100 and the China Internet ETF. You see that they were previously coupled with each other. This is because China and the US did a lot of trade. And a lot of the best Chinese companies used to even be listed on the NASDAQ or the New York Stock Exchange. But see how since the start of 2021, the NASDAQ and the China tech have clearly decoupled? There are many reasons for this, and that's a whole discussion within itself. But the point is this: Chinese stocks used to follow US stocks, but now they don't anymore. In the past, when the US NASDAQ tanked, the Chinese stock market tanked even more because it is more volatile. But now we are seeing the NASDAQ go into bull market while Chinese stocks are still in the bear, near the bottom. The last few weeks, we saw the NASDAQ have a decent pullback while Hong Kong stocks have been rallying a lot. People could say, oh, if Hong Kong and Chinese stocks could be used as a hedge when a recession hits the US. Before, you could say you weren't sure. But now there's more and more proof that there's quite a decoupled from each other, and the US goes into a recession and stocks could actually go into a bear market in 2025. Then that could actually be countered with a bull market in China. And there are strong signs that the Chinese and Hong Kong stocks are currently bottoming. Who knows? It could hit a definitive bottom this year. In the last 3 weeks, the US Fed refused to cut rates. And so the US dollar and yield rallied up, the NASDAQ pulled back, Bitcoin pulled back, and even gold pulled back. Even most Asian indices, such as the Nikkei of Japan, saw significant pullbacks. But, you guessed it, Hong Kong and China held up steady, and in fact, pushing up. A bull flag seems to be forming on the China A-Stocks Index, and HS Tech and KWEB are both breaking up. So I think there is enough proof to state Chinese and Hong Kong stocks have decoupled from US stocks, which would mean that if the US turns bear in 6 to 12 months from now, they could form a hedge. If the US stocks turn down, which is just a matter of time in many people's view, Chinese stocks could actually go into a roaring bull market. But that's not all that we could like about the China and Hong Kong stock markets. There are some stocks in Hong Kong that pay dividends of up to 20% per year, which is a nice bonus between you and me. So we are currently being presented with the opportunity of a generation. And it's up to us to take advantage of it. I think the Chinese stock market could be one of the biggest investment opportunities today, especially if the US goes into a bear market, which according to some indicators seems to be the direction it's going. That being said, the Chinese stock market is a scary place if you don't have the right guidance and info. But fortunately for you, we're here for you. In our private Discord community, we share daily updates and insights into not just the Chinese stock market, but all financial markets, from the US stock market to crypto, and from gold to the Hong Kong stock market. Click the link in the description to join us. Thanks for looking at our video, and I'll see you in the next one.